Hello, everyone. Thank you to my colleague John. I'm also working on Team Planet, so we're in that same boat. I actually haven't done a slide deck or a pitch in the last 5 years since I was a founder, so this is kind of a debut again for me. Thank you. I am going to talk, and I'm happy for John because he set the stage a little bit with that, going into the MRV space, and the MRV space is really not that much focused on carbon, right? Carbon is just one element, but that is just like the poorest proxy, but the best proxy that we have developed so far for planetary health. And I'm going to talk a little bit about natural capital beyond carbon today. And so my background is in climate tech. I've been working in climate tech for the past 10 years. I've been working in energy mobility. I've been building a fund, climate tech fund, over the last 3.5 years. Been investing in different projects, also agriculture and carbon projects as well. And I've been personally investing in crypto in 2007, from 2007 until now. And then I just had the opportunity in October, when there was a big experiment, I think, that launched in August with Klima and Tukan, to see that, to ask questions, to not get good answers. And that was what drove me into that space, because I did see the huge potential of this space, but I didn't see that we were on the right track to capture that potential. So that's why I decided to go full-time into refi, into regenerative finance. And just 6 months, I joined the Climate Collective. And who that is, I'm going to talk to you about as well. So first, I'm going to talk shortly about the Climate Collective. I'm going to tell you a little bit about nature-backed currencies, if you haven't heard that term yet. I'm going to talk about the opportunity, about the size of the opportunity, because when we talk about the voluntary carbon market, it is minuscule to the size that we need and to the size that we have of the opportunity. And the last one, of course, I'm going to talk about natural capital. So the Climate Collective, and you've actually seen the map on the right already from John, because we worked together on that with the Climate Collective and John and the ReFi DAO. We are trying to expand basically the climate and crypto space, right? And so we've got 5 million Cello from the Cello Treasury to put into grants and to develop membership events and also advocacy towards politicians to basically bring this space forward. And so a lot of founding members are here today from the Climate Collective, and also a lot of grantees and future grantees are here from the Climate Collective. And so the idea is to increase the high quality supply of natural capital to enable nature-backed currencies. And what are nature-backed currencies? So to understand basically money, I think that we talked a little bit about that, and I'm not going to go into depth, but money was, in a long time, was backed by something, right? Was backed by gold, typically. And so if you were to go and mine gold, you could go somewhere and redeem it for money. So what if you turn that upside down, and instead of gold and extracting gold or extracting oil or extracting gas and redeem it for money, what if you were paid to basically protect and regenerate nature, right? And so that is the idea of nature-backed currency. And then, oh, sorry, no, I already spoiled you. So nobody's seen that? Yes. So what do you think is necessary? So first question, how many gigatons have we emitted globally in all of history as a human species? Gigatons. How many gigatons? 400. Anybody? 400. 400 more?
1 trillion.
1 trillion more?
1 trillion gigatons.
No, sorry, not 1 trillion ton, you mean, right? Yeah, no, more? 1.5 trillion. Okay, 1,500 gigatons is our historic emissions. And so, how much would it cost us over the next 30 years to avoid that amount or remove that amount? Anybody?
5 trillion.
More?
24 trillion.
24 trillion. Very good. Somebody. But I said, how much would it cost us? Actually, it would save us, because this is an investment to not only remove and avoid these 1,600 tons, gigatons, right? But we would also save 140 trillion tons over the lifetime. And that number is coming from Project Drawdown. And Project Drawdown, in my opinion, is one of the most credible sources if you look for cost-effective climate action solutions, basically. So 24 trillion sounds like a lot. Anybody has an idea what else could be in that range in terms of costs that we had over the last few years, maybe? Very good. So I looked it up. And it turns out the cost of COVID in 2020 alone was estimated to be 24 trillion. So we cannot afford climate action, really? And then, just out of curiosity, I looked for the market cap of the US dollar. You know, crypto guys, they like to look at market caps. And so the market cap of US dollar. Anybody has a guess? 23 trillion. Adds up very nicely, I think. So, what is to say? These are big numbers, but we can get there, right? And how do we get there? So, on this chart, you see in orange on the bottom, I don't know if I have, no, anyway, you see the bottom little dot, that is a 1 billion, and that is the voluntary carbon market last year. Then we see on the right, an orange-red, maybe here, is a 50 billion. That is the estimation of the voluntary carbon market in 2030, right? So we need to go 50x in 9 years. That's a big growth, right? On the other hand, there is a 5 billion, and this is the market cap of all stablecoins in 2020. Then we had a big hype, and now we have a big crash, and we're still at 150 billion this year. Okay, so we grew from 5 billion to 150 billion. Now, if you try to put a circle maybe in 2030 here, where would that be? And how big would it be? It would most likely be in the trillions, right? And so if we manage to capture a percentage of that, maybe a significant percentage, and do not back it by USDC, do not back it by BTC, do not back it by ETH, but by maybe by nature, that could have a much outsized impact in terms or in comparison to the voluntary carbon market. And so before basically I talk about the different forms of natural capital, I just want to acknowledge it is very, very hard, right? There are lots of challenges and like lots of reasons of why you cannot do it, right? And MRV is probably the biggest one right now, just because we're also missing some tools there. But there are financial, there are technical issues as well. There are legal issues, because we're dealing with a legal system that was not set up to deal with internet or blockchain or any of that, right? So there are huge challenges. Nevertheless, I think most of them can be overcome, or we can find other ways in the end to make that happen. And so, to get a little bit into the different forms of natural capital, I first want to introduce basically the three axes of how I look at natural capital. There is the impact, so how much good does it do? There is a yield, which can also be a risk-adjusted return, right? So basically, how much money do I make if I invest in that? And I want to think of investing in natural capital and not like paying costs for natural capital. And then there is the liquidity. So how quickly can I sell it if my Terra stablecoin starts to drop, right? So this is very important when it comes for stablecoin backing. It can be important for other actors as well, because if you have an illiquid asset and you want to sell it, well, then the natural capital is basically bankrupt, right? So it doesn't work either. And so these are usually, so I frame it as a trilemma, and I have that from Untangled, which is a company that is also working in the climate collective ecosystem. And they are usually at odds at each other. So usually you have 2 out of 3. I think we are seeing emerging holy grail solutions that are very small scale, that are in the middle of that. I myself, as a climate tech VC, I think the middle way for me is just to invest in startups, but that again is not scalable again, right? So, but this is the trilemma. And then going into different forms of natural capital, starting with what has been discussed at length today here, the carbon credits. I think the much more important part of that is really the futures and forwards, what Adrian was also talking about before. Just because we want to have more impact, right? And the BCT token, the NCT token, if you look at the 3 axes that I showed you before, they are bad at impact, minuscule impact, right? They're bad at yield because they're probably not going to be sold anyway anymore, and probably not to a higher price. And then they are very, very bad at liquidity right now. So it just, like, this is a bad asset in general, but also a bad green asset. I'm still very happy that they built it, because otherwise I would not be standing here, right? Anyway, futures and forward have like the chance not only to increase the impact, because you can actually close a financing gap that is currently in the market, and projects are not being developed because of that financing gap. And on the other hand, so you have more impact, but you can also have yield on it, because we assume that these forwards will actually appreciate in value over time, right? So if I buy a 2026 vintage today, probably if I hold it to 2026, I can sell it for a profit. So this is why I'm very bullish on futures and forwards. Then the next one is ecosystem credits. We talked a little bit about that, and I also see familiar faces working in that space, about biodiversity credits, about water credits, about different kind of ecosystem services and developing credits. There is a part of the refi movement which is basically trying to commoditize carbon as much as possible, so that 1 carbon really equals 1 carbon, right? But when we do that, then we should really make sure that we also bring basically credits for these co-benefits, right? These so-called co-benefits, because otherwise we're comparing. The comparison just doesn't make sense and doesn't hold up. To do that, though, I think MRV credits are a very interesting form of natural capital. And then we can discuss again, like, how does it work? How does it improve in value over time? Does it appreciate in value over time? Or like, what is the liquidity of that, right? But to do biodiversity credits, for example, there is currently no good baseline to do that. So we first need to start. There's a company called Simplex DNA, and what they do is they build a Web3 Wikipedia for biodiversity, right? They build the registry. They want to have like the open source baseline, basically, and provide that infrastructure for that. And this is extremely important if we want to try to monetize any of the ecosystem service credits. Then, of course, there's traditional yield. Just because you have a project, it doesn't mean that you cannot take anything out of there anymore, right? You just cannot take more than nature produces for you. And I think it's even important to put that in there, because if you do not, then you basically exclude the humans from this, right? And so if you do exclude the human, you will have a failed project, because after 5 years, somebody's going to lock it down, somebody's going to burn it down, right? And so if there's a way for people to be involved with timber, with fruit, with vegetables, meat, fish, whatever might be applicable in that context, I think that is a great opportunity. Then the next one is project and land tokens. So you can basically, right now, most of the carbon is bought from the spot market, right? In the future, it might be more bought in forwards and futures. But you could also just directly invest in projects, tokenize that project, and then basically earn all the yield that that project earns over time, right? The same, you could buy some land and then basically earn all the yield that the different projects that you may develop over time, plus the appreciation in value of the land, and you can tokenize that and capture that. With this approach, of course, we need to be super careful about like neocolonialism and like being sure to involve the local community, right? And this needs to be part of the solution anyway, every time, because otherwise it's not safe also as a green asset class, right? The other one is RWA, stands for real world asset, and this is basically financing for solar, and this is where the word breaks a little bit down of natural capital, and at one time we have to rebrand that in something planet positive capital, climate action capital, something like that, because renewable energies are definitely part of it, and especially if you look at like co-location projects where you farm raspberries, for example, in a regenerative way, and then you add some solar panels to protect the raspberries from hail, for example, right? So you can combine that very nicely. That's why we also need to take that into account, right? Not only look for nature-based solutions. Then one more thing. Again, biased as a venture capitalist, I think one of the sweet spots that sits right in the middle of the Venn diagram that I showed you is actually buying like region token, right? Because if region succeeds, it has a very high impact, it has a very good yield, and it is going to be very liquid, right? And so investing into projects token, I think that is also a form of, can be a form of natural capital, depending on the project, right? Lastly, experimental systems such as interspecies money, maybe you've heard of that. And I think there's like many different approaches. And John, maybe one thing that I disagree a little bit with what you said, at least I don't think what you meant, is that I'm really grateful that we have like the toucans and the cleamers just breaking the system, right? Because this, I think, a big part of why we're standing here in this group today is probably Klima, right? And so the second order effects of these experiments, also the second order effects of Bored Apes, right? To have NFTs and to make NFTs mainstream, I think the second order effects of these can be very positive. And so I want to have more experiments, not less, and I want them to be Web3 native, and I want them to, be pseudonymous or whatever, to really be brave and just try out new things and fail with it if necessary, or succeed. Happy to. Well, that's it. Thank you so much.